Hi ladies and gentlemen, this is Game of Trades, and this video will be explaining why I think the stock market is in a massive bubble, and why I think it has been for around a decade. So this is a chart of the Dow Jones Industrial Average. It is the stock market for the past 100 years, and it's just to show you a quick glimpse of what it looks like on the long term. This is not inflation adjusted, so keep that in mind throughout the video. The point of this chart is to show you how the markets behave in the long term. And you can see we have periods of economic stagnation, and we have periods of bull markets and economic prosperity. And this is the nature of the stock market. It goes sideways or down for a while, and then it goes up. It starts a new bull market, and then sideways again, and so on. And this is how it's been for the past 100 years. So we recently had a period of economic stagnation here from 2000 to 2008. So in all logic, we should be starting a new era of economic prosperity. I don't believe so. I believe that this period of economic contraction is far from over. I've been saying this for a while, and now with the shutdown over the past few months, I am convinced more than ever I think the stock market will undergo a massive revaluation. And so in this video, through a series of economic indicators and charts, I'm going to make the case for this theory. So now let's take a look at the velocity of money. Before I go any further, make sure to hit that like button if you enjoy this type of longer term fundamental analysis. It does take more time to prepare these videos, so it is very appreciated. So this is a simple chart showing you the velocity of money from 1930 to 2002. I'm going to show you the full chart going to 2020 later in the video, but to really understand the concept, we have to be looking at this time frame first. I use the velocity of money as an economic indicator. It's basically the number of times a dollar goes around the economy. And so it's an extremely simple and accurate indicator of economic health and economic activity. When the velocity of money increases, it means people are spending more. People are creating things, selling them. Money goes around more in the economy, and so it means things are doing good. When velocity decreases, it means people are saving more money, people are more afraid, they are creating less things, they are selling less things and spending on less things, and so it means the economy isn't doing that great. So you'd guess that the stock market is in correlation to the velocity of money. And you'd be completely right. We can align the two on a chart and see this beautiful correlation between the velocity of money and the stock market. I'm going to show you that chart right now. You can see here I align the stock market in orange over the velocity of money in blue. And you can see that throughout this entire 70-year period, there is a very high correlation between these two. You can see when the velocity of money goes up, so does the stock market. When the velocity of money is going down or going sideways, well, the stock market is underperforming. And we see this again and again on this chart. This correlation is perfect. And it makes sense, right? When the economy is doing good, well, the stock market does good. And when the economy is doing bad, well, the stock market goes down. So considering that the stock market has outperformed in the past 10 years, you'd probably guess that the velocity of money has been going up. That the blue line on this chart looks something like this. Well, you'd be wrong. I'm going to show you the velocity of money right now. This is an up-to-date chart of the velocity of money, and you can see we peaked right here in 1997. And the velocity has been decreasing ever since, all the way to now in 2020. And this chart doesn't even take into account the economic shutdown that we've had. We are probably way below this value right here. I mean, just think about it. People are not able to go outside and spend their money. Even if they want to, they are not able to go and participate in the economy. This is the first time where we've had this type of situation. There is absolutely no data that we can compare to in history where we have something like this. So I am very surprised when I see bullish investors that are so confident in such uncertain times. So why has the stock market been going up and the velocity of money going down? And to answer that question, we have to go back in history and see the last time where we had the exact same scenario. Now you can see this is the full chart of the velocity of money over the past 100 years and how it compares to the stock market. These are all charts that I created myself, so again, don't hesitate to drop a like if you appreciate this type of analysis. We can see clearly on this chart the correlation we had during those 70 years and how the stock market diverged right here recently from the velocity of money, which has been actually going down all the way to 2015 on this chart. And again, in 2020, this value is probably somewhere very close to 1. And if you look carefully on the chart, you'll notice there is one other period in history where the velocity of money was decreasing and the stock market was increasing. Right here. And this was the Roaring 20s. The stock market was in a massive bubble while the underlying economic activity was actually going down. And you can see after this period of divergence between the velocity of money and the stock market, there was a big period of revaluation of the stock market. The stock market actually lost 90% of its value during a period of 2 years. Now, I'm not saying that is something that is guaranteed right now. This type of scenario is very scary. But I do think the stock market will undergo some type of a revaluation before the velocity of money can pick up again. And I cover this in the last video I made on fundamentals. It's called SP500 Poised for a Revaluation. And I explain exactly why the SP 500 has always needed to go back to undervalued territory before starting a new real bull market and not just a bubble. So why did this happen? What actually led to these situations? What happened in the 1920s that is so similar to what's happening right now? And to answer that, we're going to take a look at the Federal Reserve balance sheet. Now, I apologize for the quality of this chart, but there are not that many that go back 100 years and that show this pattern, this beautiful pattern, where you can see that the Fed balance sheet increased massively during the 1920s and how the exact same thing is happening right now ever since 2008. Now, is it a coincidence that these are the exact same periods where the velocity of money went down and the stock market went up? That is a question that is up for debate. Now, this was back in 2011, and the quantitative easing program has been continuing since then. So this should be even higher now. In fact, I'm going to show you the chart going to 2020 right now. And you can see with the recent stimulus package right here for the economic shutdown, the balance sheet is absolutely going through the roof. And it will likely continue to do so for the months to come. And that is basically the ideology of the Federal Reserve, that each deflationary downturn, they can stimulate inflation by increasing the size of their balance sheet. And that's exactly why this has been one of the longest bull markets in history, because ever since 2008 right here, they have been increasing the money supply at each economic downturn. So right now, I think many investors are flocking to stocks because of uncertainty around the future of the US dollar. And so anyone that has savings is basically investing everything into anything they can. But once they realize that the stock market is also in a massive bubble, and when the tide begins to turn, that is when we will get those selling waves. So as short traders, all we can do is look for those big sell signals, lower our risks, keep our stop losses, and be patient for those big moves, because I do think that those big moves will come in the near future. Unfortunately, I am running out of time on this video, but I will absolutely be continuing into detail about this in later videos if you enjoy this content. So make sure to drop a comment below telling me what you think of this content. Now that's about all I wanted to say in this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading, and see you next time.